Testing 1, 2. Testing. Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. Live streaming from the Equity Management Academy. Let's jump right into the market here this morning and take a look at the silver market trading last at 28.41, up about 40 cents. This is live streaming for June 1st, 2021, directly from the Equity Management Academy live trading room. Silver trading last at 28.4250. Gold trading last at 19.0560. We have seen a high of 19.20 early this morning. We have completed the target of 19.15, which was the sell one level coming into today. And as you can see, the market reverted from that level, which is indicating as the AI for the VCPMI, the variable change in price momentum indicator, recommends that this area up here is an area of distribution of supply, and it is a very high probability area to see supply come into the market, to see a reversion potentially unfold and come into the market from these levels, or experience selling pressure as we have, and in doing so, by closing below the level of 1915, it activated a short trigger. A short trigger at 1912.60. Your stop is 15, and we're looking at 1900, 1899 as the target. The daily average price here is 1900. The extreme below that mean is 1891. And the buy to level is 1875. On the weekly numbers, we're looking at the weekly average at 1899 has been also identified. The extreme levels below that average price is 1883, which is the buy one weekly level, and the buy two level is 1859. The extreme above that mean is 1923. The sell to level is 1939. These are the levels that we have been able to identify for the extreme above the mean on the daily and the extreme above or below the mean on the weekly. The market is in a bearish daily mode with a weekly average, which has activated the target of 1923. So we're a little bit contradictory on the daily against the weekly for the time being. The targets ideally that we're looking at is 1928, 1924. That essentially is the extreme levels above the mean. And we seem to be getting a lot of interest here as we trade the handle of 1910. The silver market is in an area of what I call, or what the VCPMI identifies it to be as, a harmonic alignment between the sell 2 daily of 2850 and the weekly 2840. We got up to 2871, and experienced some supply and sellers coming into the market at that point. And as you see, the market reverted right back down into that sell to or weekly and daily, and now we're activating what appears to be a weekly short trigger on 28 and a close below 28.44. So you want to be alert, and you want to lock in your profits here, basically. If you have any profits, or if you've maintained a long bias as we have here, you may want to start booking in. Some profits here. I'm not so sure that I want to jump into the short trigger as the market is breaking out above the sell to levels here, and that is basically confirmation that there are higher price fractals to be accomplished. And as those targets are broken out, they become support for the next level. And in this case, you're looking at the silver market activating the 28.82. Although we are now activating a short trigger from 28.44 for day traders, this is an opportunity if you want to take the short side of the market on a trade, on a short-term trade, that you can do that. As you can see, the market reverting right back down following that sell signal from the sell one level. If you have profits up here, you know, traders in my live trading room, you know what to do here as we got up to that sell two level or above. And you should have taken some profits up there. Coin is moving nicely, 241.55. Continue to hold on to coin. Continue to hold on to your virtual currencies. We're getting a lot of volatility on the virtual currencies here, but they are a great tradable asset. $1,900 on the gold market. We are reverting it back down here, giving back a little bit of profits here. Coming back down into that average daily, weekly, harmonically. Now, this is a key level, a pivotal point that we want to watch and see if buyers continue to honor or continue to buy into these corrections here, into the the VCPMI daily and the weekly level that we're looking at. This is what we call a harmonic alignment, when the price aligns together pretty much daily and weekly. It is the highest probability signal that we can identify. So it's completed the target here, as you can see from the short trigger of 1919, and now it's neutral. And for day traders, pretty much, you took profits up here at 1915, you went short, and now you cover that short at 1900. And the trend, the price momentum trend is bullish now as it closes above the 1899 once again. If not, and it closes below there, then we're looking at the 1891 to 1883 to be activated. Let's take a look here at the TradeStation platform here and see what it looks like here. We've come down to the buy to level here on the daily gold market, reverting right back up from the sell to level. You can see the price has reverted from the extreme above the mean to the extreme below the mean, all within one session. So the volatility is increasing here, and you want to measure your volatility accordingly. Continue to hold your core position, as I believe we need to get to much higher prices than what we are looking at, but we are, and we will see corrections in between. So you want to manage, you want to manage your profits accordingly. The Grayscale, GBTC, the Grayscale Bitcoin Investment Trust, seems to have found some support at around 29.60. Coin is reverting right back up. 250.09 was the recent high here. 242.50 is trading last. Things got quiet here a little bit. Consolidating. We got Nugget up 59, one of the instruments that we trade on the long side. This is a 2-to-1 velocity ETF that is a great instrument to trade short term. Still a fairly quiet morning here with a little volatility overnight, and the metals here slowing down this morning with an upward bias here as we come into this new week. I don't believe this is the top of the market as of yet, but it is overbought. I still think we need to take out that 1925-28 area for the silver. I'm sorry, for the gold market, and that is where pretty much I think is going to tell the whether we have a lot of supply up here now, whether we have a lot of sellers are interested up here to sell the market, or we're going to be looking at higher prices here. Hold on to your derivative position. Hold on to your derivative position. The market getting up to 1919 earlier in the goal was a good level here to take some profits here every time we've come up here, even even on the 26. You can see the reversion occurring, and the confirmation of what the AI is saying here is that it has identified an area of distribution of supply between 1915 and 1923. The harmonic relationship, the highest probability is 1924 if activated. And now we've tried a couple of times to get up there, but we're having a lot of supply show up there. The high so far was 1920. And you can clearly see the supply that's coming into the market. The silver market now trading below the sell one level, 28.28. It's activated, obviously, a short trigger now from the sell one daily level in silver. So our recommendation to take profits up here obviously is working out. Hedge up here. It was a great level to really lock in some nice profits here and let the market pretty much revert to where it's going to find some additional buyers here in the market. The resistance of 28.38, once broken here, it becomes the support for this higher price fractal here that we saw as the market approached the distribution of supply area with a high of 28.71. This area serves as a support. Now. Once resistance is broken, it becomes support. Once support is broken, it becomes resistance. So we're defining right now basically the market at these levels here, 28.28, and a close below will activate a daily short trigger, activating the 27.96 to 27.88 levels below. holding on to this level of 28.28 here. It's pretty much establishing that we got some support here. I think we're going to see a lot of volatility here as we move into the end of this week. And the 4th of June, which is Friday, is a date that we expect a lot of volatility to unfold, as it indicates a very significant turning point for us, whether we're going to be making a short-term top or we're coming into a short-term bottom, you might say. So the move in the market moving into this time frame will identify the cycles for us that we're looking at on June the 4th, whether we are looking at a top, a short-term top, or some kind of a short-term bottom in the market. If we continue to rally all the way up into June the 4th, for the rest of this week, then the probabilities become very, very high that this date could bring a major short-term top. Now, this top here, once again, is a counter trend level that we expect the market to revert back into to test the lower levels of maybe even the 1850, 1875. Before the resumption of this uptrend that we're building, or if instead we decline, you might say, into the date of June the 4th, which is on a Friday, and we come in on a corrective pattern into the levels of support, or ideally the blue levels, you might say, then the algorithm identifies that level to be the area of accumulation of supply. So we basically are trying to identify whether the market is going to be move up into an area of distribution of supply, which is basically resistance, supply coming into the market, or we're going to revert back down into that low levels of the extreme below the mean in blue levels here as we come into for the rest of this week, and those levels could be down to about 27. It could be about $1 from where we are right now. So we're looking at possibly another 60-70 cents on the upside to complete the upside target, or we're looking at a reversion to the bottom, you might say, of the extreme below the mean, ideally in the harmonic relationship between the daily and the weekly of 27.28. We've reverted on silver from the weekly average price, the daily average price of $18.99, $1900, and this is what I refer to as the harmonic alignment, where this relationship offers the highest, most optimal probability mathematically that we're going to see buyers show up here or a reversion to unfold. As you can see, we're beginning to see that occurring, and so therefore on a close above this level here in a few minutes, it will activate a bullish price momentum. So hold on to your your core long-term position here, and let's see what the rest of the week brings. But I believe we're going to be looking at some friendly prices here, and the path of least resistance, I believe, is for the market to reach that extreme level above the mean of sell 2, ideally for silver, which is at 1923.24. I'm sorry, for the gold market at 1923.24. And for the silver market, you're looking at about 26.82. The silver market seems to be more volatile than the gold market here, so you want to take that into consideration when you're entering into your position. But you can see here that 28.82 is the target, the next target for the silver market. Continue to hold your core position long, as I said, and let's look for trading opportunities here and buy the corrections into the buy 1, buy 2 level. Thank you once again for the opportunity to share this live show with you, my friends here, and I will continue to update you in my live trading room throughout the day. If you have any questions at all, please reach out to me. Feel free to go to the Equity Management Academy contact page and click on subscribe. You'll be surprised the intelligence that we can provide you. Have a great trading day. We'll talk to you real soon. Take care.